The SPI futures are higher, up 30 points or 0.6%, and that comes after we saw fresh records reached by the Dow and the S&P 500. The S&P actually adding 1%, the Dow at 0.8% there through the overnight session. No clear catalyst, just a continued drive higher, and the greenback also moving higher too. Let's have a look at what we saw on the Aussie, struggling, remaining below parity as a result of that strength in the greenback there. We did see it go to a low of around 98.7 US cents through the session this morning. Yeah, let's get some more on that, and certainly the reaction in currency markets to the budget being released. Stan Shamu joins us now from IG in Melbourne. Stan, good to see you there. Yeah, we did see a little bit of a reaction, it seemed, initially after the budget was released. What did you make of that and the moves in the Aussie overnight?
Yeah, absolutely. I think the initial reaction was straight away always going to be a negative one to the budget speech. Of course, with the deficit looking like it'll be around for a bit longer, and as well just a lack of confidence that the revenue streams that the government's pinned to get us back into a surplus will be sustainable going forward. I think that's really put a lot of pressure on the monetary policy side of things, and a lot of people are now feeling that the RBA will have to remain easier for longer in order to accommodate for an extended period of fiscal consolidation there. As a result, I think the Aussie dollar has managed to test these lows from I think March 2011 and June 2012. This will probably be a bit of a key near-term support for the pair. Of course, we came as low as 0.988 this morning, and we've managed to bounce off that level, but being a key pivot low, we could easily see this level broken before the end of the week, and should that happen, then we'll be open for a move down to 96. Today we've got wage price index data and motor vehicle sales due out, but I don't think this will have as much of an impact as the reaction to the budget. Of course, there are some other factors as well weighing on the Aussie dollar, and it's not all about the Aussie dollar today. It's also growing concerns about the Chinese economy weighing on commodities and in turn the Aussie dollar. While on the US dollar side of things, it certainly seems like the US economy is ticking along. Confidence is growing over there. We saw the small business index showing a pretty big spike with coming in much better than expected, and that really shows that the confidence is spilling over from some of the major parts of the economy or the bigger companies of the economy and into the smaller businesses, and this is always a good sign moving forward for the US market. Of course, at the same time, we've heard growing rhetoric that the US deficit is falling faster than was initially anticipated, and this will definitely remain supportive of the greenback side of the equation for the Aussie dollar. As a result, the near term certainly continues to be bearish for the Aussie. Probably any rallies back to parity or just above parity will be used as an opportunity to sell. I think the level we were watching was that 1011. That was the initial source of the breakdown following the RBA's surprise rate cut last week. So that probably will be the trend for the Aussie dollar in the near term, selling the rallies or selling the breaks lower after support's broken on that momentum play.
Very quickly, Stan, the opening call for the ASX 200?
We're currently calling it up 0.6%, so that sees us open about 42.50. Of course, the commodities are expected to open a bit lower. We've got BHP called down about 0.5%. That's just from the ADRs there. And of course, we've heard some comments from Andrew Mackenzie, CEO of BHP, suggesting that they're looking to cut spending by about 18%. At the same time, Sam Walsh from Rio Tinto has said they're looking to cut spending by about $2 billion or cut costs by about $2 billion. So that really does raise speculation that the two big miners might now be looking to return a bit more cash to shareholders. So that story will be interesting to see how it develops through the session. We'll obviously have to watch out for some of these sectors that might be prone to a negative or positive reaction from the budget changes, particularly from the infrastructure side of things, where I think 24 billion's been pinned to projects to do with infrastructure. So we have to keep an eye on the likes of Leighton's, Transurban, UGL and Downer. At the same time, we've got the interest rate sensitive stocks like real estate, for example, which are likely to continue to benefit from expectations that the RBA will have to stay a bit easier for longer going forward.
All right, Stan, thanks so much for that. Stay with us. Coming up on First Business, Saul Astlake, Chief Economist at Bank of America Merrill Lynch Australia, gives us his analysis of the budget.
When you're suffering with the aches, pains and congestion of cold and flu, it can be a real struggle. Now there's a Nurofen that targets cold